Hello friends, welcome to my channel and thanks for watching this video. Friends, this is the second video of the series for US weekly market report, and the first thing which we are going to talk about in this particular video is about the bond yield. Okay, because it's been much talked about, and people are using this indicator with and comparing it with multiple things, whether the economy is recovering, whether the stock market looks heavy, whether some other things. Okay, but we are specifically talking about the data and how it is looking right now. Let me tell you, as you can see, these are three lines, and the way it is looking is in terms of percentage. So this red line represent the bond yield of 2 years. The um, green line here, so the green line specific is for 30 years, and this blue line is for 2 years yield chart. Okay, now as you can see here, what is moving, so except this line, which is 2 years worth of data, so this is the chart line of 2 year bond yield. The 10-year one, which is the blue one, and the 30-year, which is the green one, both are moving on the upside. So as you can see, in July or October, it was at minus 70 percent. Now it is minus 41%. So there is a 30% minus. There is a 30% recovery on the upside, and when you are talking about the 30-year yield, so it was quoting at around minus 52. Now it is minus 20, so similar 30%. So both are moving in tandem except this 2 year yield. Okay, now more specifically, if you are looking at this is the bond yield chart, dynamic yield chart, okay, which you can freely get on the website through Google. Now here more specifically, if you're looking at this bond yield chart, so this is a very normal chart. Okay, and a healthy bond yield chart has to look like this, but here what we have seen that 2 years is not moving, probably because it has been managed, and the market regulators won't let the short term yield shoot up, more sharply when compared to long term yield. And as you can see, in the past 5 or 6 months, when 10 and 30 years yield are moving on the upside, the 2 year is not. Okay, and this is very easy to understand rather than going into much of data. If you are specifically looking at this chart, we do know that when the yield for short term goes at or above the yield of long term, then this is bad for market. Okay, historical data suggests that. But if the long term yield moves up and the short term yield remains the way it is, or doesn't move in tandem with the long term yield, then maybe there is a short term volatility, but it won't create much panic unless something changes. Now this is the 30-year yield, okay, which is flat at 2.4. Now here you can see there is a small tilt. If you are looking from 7 year to 20 year, this is not a straight line, this is a tilt. Okay, so maybe this, now it is trading at or near 1.64, the 10-year yield. It may went up to 1.67 or 1.7. That's where this line gets flat. Okay, and I think if it started moving at or above 1.7, that will be the time when the central bank will come in and try to keep the rate or try to push the rate on the downside. Okay, so there is some slight upside that is open on the upside, but if you are looking at the overall chart, and that's what the market watchers are concerned, at the shape, or looking at the shape of this bond yield. So for the time being, it looks healthy, and we do know, and this is very much there in front of you, the 2 year yield hasn't moved anywhere. It's not possible in the free market when two of the long term yields are moving up and there is no change in the short term yield. Okay, because short term yields are very much reactive to any kind of short term events which are risky, which are uncertain. So it's not possible here. Okay, so if you are looking at bond yield, it has a room specifically to the 10 years because most people talking about that. So there will be some slight up move which is still there, but I think there will be some intervention after that. Now, looking to the second indicator at the end of this thing, this week. So the second indicator is for the chart of crude. So this is the crude oil WTI futures chart, and this is the hourly chart. As you can see, no doubt the price has moved very sharply, but when you're talking about supply and demand dynamics, everybody knows that it is very much evident that electric cars are have already hit on the road and they are quite a success. And other countries across the globe, it's not only in US but other countries across the globe are using this model. So in that case it is not easy to replace all the as you can say vehicles from the road, but it is quite evident that the stock market have already realized that whether it is going up in the short term or in the medium term, that's fine, but there is a cap, because over a period of time, slowly and steadily, the traditional vehicle, I would say, which runs by fossil fuel or by petrol or diesel, has been moved and electric vehicles will come into the play. So this is a long term story, but if you are looking at this chart, we can see that probably the WTI crude futures chart is heading on the lower side. So you have these three support levels. On the lower side you have 64.86, then you have 64.15, and you have 62.36 on the downside will be your big support. Now on the upside it can again move up to $70, but that will be a market momentum kind of thing. So we have to see how this is going to move on both the sides. So I mean, the thing is, oil does makes a difference, but looking at the volatility or looking at the price movement, it would be better for the overall market when people understand that this is the range. Then it would be easier for the market to guess about the price trend. Right now what has happened is a sharp upside and a sharp falling down. The oil is falling down for the past 2 or 3 months, and now it's making a move on the upside. So these are trading moves or traded moves accumulated with some sort of supply and demand dynamics, but there are lots of things which are yet to be covered. Now there is one more thing which is very important to talk about, and that is about the US dollar index. Now I'm talking about this, and if you are looking at the long chart and along with the passing or passage of $1.9 trillion package, these kind of things will definitely slow down the pace of the dollar or crack the currency. This kind of things will definitely put pressure on currency of any country. It doesn't matter whether you are a dominating country or a developing country. Okay, but these kind of things put pressure on the currency, and sooner or later, because there will be some reasons, you may have your own reason, but technically if you are looking at this chart and also the way the price is moving, you will see the price will heading towards the lower end of the range, because when you are putting so much debt on any country's economy, then a stronger currency will put additional pressure on that particular economy. So it's not in favor of that government as well to have a strong currency. In that case, you have to have a currency which is not as strong as people think, because when you are importing things from outside and not creating thing and exporting it, so in that case a stronger currency will definitely hurt. Plus you have your debt on the economy. Now if you are looking at this chart, what you can see here is, even in the short term, because this is the hourly chart, you will have the currency at its support 91.17, and on the upside you have 91.91. So this is the range inside which the currency is currently moving. And let's see, because the probability is it's again going to move on the downside. And specifically when we know that event which is or which was in the, it's not a dilemma, but we know that sooner or later it get passed. It's all about what kind of money they are pumping or what kind of stimulus. Now it's known that you have 1.9 trillion dollars of stimulus in the economy, and it's been started floating from next week only. So it will definitely put pressure on the currency. Now meanwhile, if you are talking about the equity market, and I have talked about this, and I have also put a short video where I talked about a target of 32,800, somewhere near there. So in the spot it is already at 32,777, but if you're looking at the future, it's already hit a target of 32,800 or somewhere. Okay, so the short term target has already been met, and the strong indication is DJI, or the Dow Jones Index, has already moved out from its suppression zone, and a strong uptrend has again resumed. I will definitely talk about that, but before that I'm just showing you the short term movement of the price. Okay, now it's been quite evident that so here we have the price have moved and moved sharply on the upside, and the price chart is showing definitive strength, and it's foolish to talk about any sort of downturn or something. So if you are looking at a very short term, you have your support at 32,663. This is about the spot, and on the upside you have 32,969 or 70 on the upside. But this is for the very short term 15-minute chart of Dow Jones. But if I go to an hourly chart, so now in the daily chart, rather than using hourly chart, in the daily chart, as you can see here, the Dow Jones is trading at lifetime high. Okay, and whatever resistance was there, it has already been crossed. As you can see here, the short term resistance get crossed. Okay, if you are using this line as a resistance, this also get crossed. Okay, if you are using this line, it also get crossed. So I mean, technically it has already made a breakout and it is trading at a lifetime high. Now what should we expect in the upcoming days and weeks? Okay, so for that I want to use line chart here. Now we have two specific targets if you are looking the upcoming weeks and upcoming months. So this is the first target, and if you want to stretch your target a bit, okay, if you want to stretch your target, then in that case you can look something like this. Okay, now what are these levels? So you have your first target at 34,183, and it can extend up to 35,500 or 35,800. So this is the range we are looking in the upcoming days and upcoming weeks, probably in the upcoming weeks and months. That would be good indicator, good time frame to talk about 2 or 3,000 points. So this is already started moving up, and we will definitely see an upside. Now there is one more point that now the Nasdaq started moving first on the upside, then it gets slam dunk on the second day. It's not a slam dunk but corrected, and the Dow Jones started moving up. So there are various sectors in the economy which are on the roll, and you will see after a span of 1 or 2 years of slump, the therapeutics kind of thing or the pharmacy kind of thing has already started making move, and they are again come back into the focus. If you have not observed the trend, go and check it out, and that's where you can find the stocks are started again moving up on the upside after a correction. So this is also one thing which you need to look at. Now talking about the Nasdaq, okay, because S&P is something which is very much stable because you have the combination of all the things. You have industrials, you have tech, and you have all the sectors. But when you're talking about Nasdaq or Dow Jones, it is specific to certain sectors or industries. Now this is the daily chart, and I want to use the hourly chart for Nasdaq because this is one of the most volatile, I would say, and most it's the way Nasdaq is moving is very fast. So if you are observing this trend, so this is the hourly trend, and let me show you to you. Let's go to the line chart. So if I draw a trend line like this, okay, if I draw a trend line like this, in that case you will see that even though you will see some correction, but it has already taken support, and this is showing the same indication uh, along with the Dow Jones. Now Dow Jones has already hit a lifetime high right now. Okay, right now Dow Jones recently hit the lifetime high, but Nasdaq is one of those index which is already trading at a lifetime high, and it's been more than a year that this index has outperformed. And as you can see, after a big correction from 14,000 to 12,500, it started moving up again, and in that case we will definitely look at a support of 12,650 on the downside, and on the upside you will have your target range of about 14,680 to 15,100. So this is the range which we are looking on the upside for Nasdaq, which means that even though there is a volatility and sectoral churn, but sooner or later you will see that the stock across the sector will again started moving up, because if Dow Jones is at lifetime high and if Nasdaq after a correction is again started moving up, it will have accumulated or compositive strength in S&P as well. Okay, so what we are going to do next, because we can see that index are moving fine, we will check the VIX also, CBOE VIX. So if I check the VIX as well, okay, yep. Now if you specifically checked the last video which I have made, I have told you that if it unable to sustain, you will see downside in the volatility index, and that's what has happened in the past 1 week. It was, I think, it was traded near 24 when I last made my video. So last Sunday or last Friday or Saturday it was trading at near to 23 and 24, and now it is at 20. Now one thing is there, that volatility will remain high, but if you're when we are talking about the levels, we'll look at the levels and we will, because we have to follow something. It's not like we will do some random things. So the two most important levels which we are going to look here are 20.40 as your first support and 19.69 as your second support. Now if this two level sustains, then what we have is a range which is in between 20 and 30 or 19 or 29. So this is the range. But if it started moving below 19.5, then you will see a downside of 11 or 12, and in that case there will be an extreme bull run. There will be a resumption of a very big bull run, or a very big or sharp bull run in the upcoming weeks and months. So I'll definitely look and watch out for the VIX and how it is moving, or whether it is holding at or above 19.5 or not. If it doesn't, then it means that there is a big trend which is on the way, and you should not ignore or miss that. So what we have here, last week it was more like a volatile with some sort of positive strength in one or two or three indicators which we have tracked. Now in this week the things are turning and turning big on the positive side, because we have seen the stimulus get passed, so it will definitely have a negative impact on the currency going forward. Okay, and let's see how the bond yield, because this is one of the puzzle which need to be solved by the Fed, unless they intervene. And if the free market things going on, then you will see a very sharp spike in the bond yield. So this is one of the things, and market is expecting that the bond purchase will eventually resume after some time. And if you're looking at equity market, it's already either it's at lifetime high, which is a case in Dow Jones, or it has already completed its correction and started moving up, which is the case in nasdaq, and it will have a cumulative impact on the S&P. Okay, so you will see that all the three index probably started moving further on the upside, and with VIX is going lower in the last 1 week, and we will definitely see what will happen in the next 1 week. And if it continues to go on the lower side, there is a much bigger and much faster rally which is definitely on the cards. So this is the end of the video for this week. I hope you like this video, and if you're getting some knowledge out of it, good for you. Do share your thoughts and comments in the comment box, and subscribe, share and like my channel. And lastly, take care of your family and friends.